Good morning, everybody. Welcome to the latest edition of Talking Ball. I'm Joe, joined by Jamie this morning. How you doing, Jamie?
Yeah, not too bad, thanks, Joe. Not too bad. Actually bought myself a new desk yesterday, so I'm feeling much more productive today.
Oh, nice.
Spent about 2 hours setting it up.
Little
Struggled
IKEA
through
job.
that. It wasn't actually. It wasn't. I found it somewhere else. But it's one of those ones where you can adjust it from sitting to standing.
Oh, interesting.
Yeah, which is pretty bougie. To try and help my posture because I feel like I slouch too much. So
Yeah,
that was the
welcome to the
thinking
club,
behind
mate.
that.
Anyway, let's. That is good news, first of all, Jamie. So, congratulations on the new desk.
Thank you.
Uh, yeah, it's the 6th today. So, some fair amounts of interesting news and some pretty wild moves actually on markets yesterday. So, we'll do our best to get through as many of those as we can and give you all our thoughts on where we think things could potentially head next. So, in terms of the latest headlines, let's deal with that first. Eurozone fears increased yesterday. There was further strong selling on natural gas prices during Tuesday, with a fresh surge in prices to a 16-week high, undermining confidence in the Eurozone outlook. There were particular concerns over the German economy, given its dependence on imported gas and increased economic vulnerability. In this context, there are fresh doubts whether the ECB would be able to tighten monetary policy significantly. Off the back of all of this, we saw the euro slide to a 19-year low. Fears over the Eurozone outlook triggered sharp euro selling, especially with the further slide in risk appetite. A break in euro USD below an important 1.0350 level helped trigger further aggressive euro selling, and the euro US dollar pair slipped to a 19-year low with only a marginal recovery. Recession talks have intensified, particularly in the US. Confidence in the US and global economies deteriorated yesterday amid fears there would be a slide into recession as monetary tightening and the surge in energy prices take effect. In this environment, risk appetite deteriorated and there was renewed losses in global equities, although we did see a decent-ish recovery, certainly in some of the US indices into the 9 o'clock close yesterday. There's also some strong gains for treasury markets. They posted strong gains yesterday, drawing support from the sliding confidence in the US economic outlook with demand for defensive assets. The US 10-year yield dipped sharply to a 5-week low, around 2.8% before stabilizing. We've also seen oil prices slump quite considerably as again fears intensified over recession. We saw WTI decline to a 2-month low below $98 a barrel before a tentative recovery. And we saw some drama in UK politics yesterday. We saw Chancellor or ex-Chancellor Rishi Sunak and Health Secretary Sajid Javid both resign. The chaos added to the underlying lack of confidence in sterling, even though the wider slide in risk appetite was a key element in triggering a move to a fresh 2-year low on cable. So lots going on and lots to look at on the charts as well. So let's get stuck into that. In terms of what's going on with FX, where I'm going to start today, although I've got Bitcoin on the screen. Dollar index powered to new highs yesterday, breaking through that 105.78 level. So a really strong breakout there. Although we closed slightly off of the best levels of the day, it still remains at elevated levels. And again, we are posting green so far this morning. So looking really good. And again, remains pretty much the best performing asset out there at the moment. And, a pretty telling sign about appetite towards risk as things stand. The big move, obviously, we just talked about a minute ago, was the break to new lows on euro US dollar, taking out that 103. Well, we've got it at 48 level. And yeah, that looks pretty horrible. And as we said, fresh 19-year lows on euro US dollar. Let's just take a quick look at the weekly chart just to put this into some context. Um, Big levels here, as you can see, that have acted as support previously, and they've given way. So it really doesn't look too great at all for euro US dollar. So looking for lower prices, certainly on that over the next few weeks and few months. Really, I mean, obviously there may be some rebounds at some stage, but overall the trend remains pretty horrible indeed. If we take a look at cable, we saw fresh lows on that yesterday as well, although it did recover off of the lows to close above support at 119.33, but again, not looking particularly healthy, and we wouldn't be surprised if we saw a move below that support level and started to challenge these lows that we posted around the height of the pandemic, which comes in at 114.10-ish. So obviously Boris Johnson under severe pressure now. The guy has obviously shown pretty strong resilience so far, but this was a big old blow yesterday that he faced from some of his most trusted cabinet ministers. So let's see what happens with that. So they were the big moves on FX. Really, there was a lot of weakness in euro. If we look across the board, we can see new lows in a lot of the pairs. Euro CAD yesterday making new lows below the support of 133.87 before a bit of a recovery. Euro Swiss had a pretty horrible move as well. That made new lows here, taking out that support at 99.72. Euro versus sterling, these two are battling it out for who's the weakest, and they're sort of both cancelling each other out at the minute, so not really much to mention there. And we saw a break of trend on euro yen. Actually saw a decent amount of support for yen yesterday. Given how weak that's been lately, that's again another bit of evidence that we're seeing a bit of flight to quality there, and people buying up the yen in anticipation of it being a safe haven. So let's move on from FX and take a quick look at some of the cryptos. They didn't really do an awful lot yesterday. I mean, it was pretty volatile in all, but yeah, a bit of a doji posted really on the daily chart. Still prospect for a double bottom to form here, as we've got highlighted with these two yellow arrows. We need to see a break above this resistance here, which we've got highlighted at 21,839. If that can happen, then we may see a decent bit of money moving back into this particular market, targeting moves potentially as high as 28,750. It's all ifs and buts at the minute. It may just end up being a bearish flag if it breaks to the downside, but I want to give the bulls a bit of the benefit here, because obviously they've had a pretty torrid time of things of late. Looking at Ethereum, it's a similar situation. Bit of volatility yesterday, but we closed well off of the worst levels of the session. Again, highlighting this level here at 1282. If we can break above that, then potentially forming a double bottom pattern, and we can look for a mild recovery higher. In terms of some of the commodities yesterday, gold took a bit of a whack on the back of the stronger dollar. As you can see there, is this chart correct? We've got a huge gap on the chart there. So it did highlight potentially a double bottom, but we're posting prices down at this 78.6% level on gold. Big gap to the downside. Is this correct? I'm not convinced by that. Let me have a look at this, see if we've got any
Yeah,
other
I've got
charts.
data. There is some data. It's just looks like a big move downwards rather than a gap.
Yeah, there we go. Let's fill that gap. So yeah, horrible move to the downside yesterday on the back of dollar strength, and into some support here around 1755, which has stopped prices a little bit today, but overall still looks pretty rough, to be honest. And given that we saw that decent break higher in dollar index, I wouldn't be surprised if we continue to see more weakness in gold. So my preference probably would be to sell into rallies towards 1805. If we take a look at silver, similar situation. We've seen that actually perform worse than gold. Big down day yesterday into some key support levels down here at 1885 to 1870. No signs of that really slowing at the moment, but that is a pretty substantial support level there. So maybe we'll start to see a bit of consolidation, and maybe the buyers will fancy a bit of a speculative look at silver. I'm going to take a quick look at copper as well, because I was looking at that for the 50% fib level on that yesterday. Absolutely sliced through it with absolutely no regard for that level whatsoever. So that didn't work out, and metal prices continue to get a bit of a pounding. But we are recovering off of the worst levels that we've posted today, already posting a pretty impressive reversal, although still a long way to go on the session on the daily chart for that to give us any sort of hope. So one to keep an eye on for now. Moving on to the indices now. Again, tough session for a few of those yesterday. This is the DAX trading at support, really key support actually, 12,431. These previous swing lows that we posted back in March, we've fallen directly into that level and seen some buying interest. But we need to see whether or not there's going to be any follow through to the upside on that. Below that level, we've got a 50% fib level at 12,130. So potential for a bit of bounce on that today, maybe. Looking at some of the US markets, we can see posted some decent green yesterday after posting initial losses. We saw actually a pretty decent recovery. We're back into this gap that was created on the NASDAQ, which was filled last week. But we've also got a downtrend resistance line here. So if we can overcome that, then there is potential for a bit of a recovery on some of these US markets in the very short term. So maybe worth keeping an eye on that. S&P 500, not as impressive as the NASDAQ, still looking pretty poor overall. There was a decent reversal in that yesterday. And finally, if we take a look at the Dow, still posted red yesterday, but a bit of a long-legged doji posting on yesterday's session, a bit of indecision, still a bit of work required in order to potentially turn things around on this in the short term. I think I'd be looking for a break above that level there, 31,932. And let me just make that a bit, 31,912. A break above that, and we may be in for a bit of a corrective move to the upside. This 38.2% fib level still doing a job as support. So that's that. I feel like I've been talking for ages. So Jamie, give me a break, please, and talk to these guys about some stocks.
Sure, thank you, Joe. We'll start today as we usually do with our biggest gainer and loser. Our biggest loser on the day is OMER or Omeros Corporation, which was down 33%. It actually had a really strong move on, that would have been Friday, breaking above this previous resistance on some pretty good volume, but obviously the long weekend didn't do it any favors. Looking into this, OMA shares down nearly 11%. That was in June, so that doesn't help us at all. But yeah, down 33% after that strong move we did have. The biggest winner we had was this, and you can just see it at the top there. This is RBCN, Rubicon Technologies. We'll zoom this out to a weekly chart. Look at that volume increase we saw there. So usually we're getting around 16,000 shares traded a week, so not many at all. But this week already 5 million. Let's see if we can work out why. Here we go. Almost 66% higher after cargo shipping and logistics company Janelle began a cash tender offer to acquire up to 45% of the outstanding common stock of Rubicon for $20 per share. And that's obviously led to this really nice price increase, all the way up to closing around $15, up 65% on the day. So pretty nice move there. Looking at a heat map for yesterday's session, as Joe said, it was a pretty strong day for the Nasdaq. So you can see some of the more superior performers yesterday. We've got Google, Meta actually did quite well, up 5%, Amazon up 3.6%, Tesla up 2.5%. So it seems the bigger names really dragged the market up yesterday, because you can see there's a bit more red if you look into some of these smaller names down here that make up less a percentage of the S&P. Most notably to me, energy was down pretty hard yesterday, and we'll check out a couple of those stocks in a moment. Diving into a few of these names, we'll look at Roblox first, which is up 14% on the day, and I think we had a look at this recently for the potential of a bit of a double bottom pattern here to be playing out, and this is the kind of move I was hoping for to confirm that. A strong break through what was resistance, this green box, on good volume, and we closed near the top of the day's range as well, nearly right at the top of the day's range. So this to me looks set now for a move higher. The measure move from this pattern takes us all the way into this previous resistance here. As a secondary target, we could potentially look at this 38.2% fib from the move down. So that would be a pretty standard pullback in a downtrend. That would also fill this gap which we've got open back in February. So a pretty strong day for Roblox yesterday, potentially a move higher incoming. We'll check out Coinbase. We looked at this yesterday as well. for the potential of this to break to the downside, but it wasn't to be yesterday. Rallied off this support level we've seen here quite nicely, but we still have a lot of obstacles to get past on the downside for this. Firstly, this downward trending resistance line, which comes in at about $58. And if we were to get a break of that, we then have to try and get through kind of these highs up here for me, really, to be changing this picture for me. But still pretty bearish on Coinbase until we do get some breaks above these key levels. Shopify was up 8%, and again, this similar kind of thing, a stock that's been struggling for a long old time now. Obviously, we had the stock split not long ago. We've been ranging in this bearish channel for a little while. We sold off right into the support, and it looked like potentially we might get a break, but I think we identified this felt a little bit oversold with these 4 or 5 red candles in a row. So we did get this rally off support. The volume wasn't amazing. The bias for me is definitely still selling into rallies, and I would be keeping an eye on this resistance level for potentially an area to get short. You get some good risk reward there. Let me have a look. So the kind of thing you could potentially do is, have your entry level where price has been touching, so kind of around the $40 level if you want to be a bit more conservative. You should keep your stop really, really tight on this. I mean, the thing for me with a trade like this is if price gets even kind of this much higher, it invalidates the idea because you really want this resistance to stop price in its tracks. So on that basis, you can keep a nice tight stop and trade it all the way down to the bottom end of the range. So something like that would give you 2.83 risk reward. So that's quite a nice risk reward trade if you're interested in that. Meta platform still holding the 61.8 fib. I still think it's right for a break at some point, but these things, you never know how long they'll take to happen. But just a lot of bearish price action for me, and although it is surviving, I'm not convinced right now. Alibaba is looking a bit better actually. We're back at this support resistance level, sorry, and the buyers keep stepping in earlier and earlier. So let me see if I can get the right tool out to show you what I mean. I can never find the drawing tool. Do you know where it is, Joe? Am I being silly? Where you just kind
What are
of
you looking
draw
for?
stuff. Like the little pen that you can kind of just
Right. If you go to
draw stuff.
the T, where the T is, for
Yep.
text. Oh no, maybe not. Maybe where the
Hmm.
square is. There you go,
Square. Oh,
brush.
brush.
Yeah,
Nice.
or
So I just
highlighter.
wanted to highlight. Thank you. So we've got this high low price has retraced again here. Another high low price retraced again here. Another high low. Look at that. That's why I wanted a drawing tool for art like that.
Yeah, it's
Um,
fantastic, mate.
that's real good stuff from
Looks like a
me.
couple of smiley faces at the bottom.
Yeah, that's true. Look at these. I like that. And it is it's more smiles for Alibaba than we've seen for a while. If we get a break above this level, let's look at it on a weekly chart. You can see we've got a lot of wicks coming off here. I think we're looking for a return potentially up to the 138 level, which I've got marked in blue. So yeah, looking much, much better. Let's see if this can get a similar break. We've had really low volume actually recently, which is actually quite notable looking at it now. Potentially we are in for a bit of a higher volume move soon, but we'll keep an eye on it. I'm liking the look of this. It's starting to recover a bit better. We've got, I think we said this before, but I've lost it. There we go. A bit of a double bottom there and a slightly higher bottom there. So we could be potentially seeing a much larger move higher, but we'll see what price action tells us. Apple, not really sure why I've got Apple on here. I think I just wanted to say we are posting a bit of a higher low again. So we've got this lower low here, high low here. If we get a break above this this black line here, that would start to me showing the bulls are trying to get back in control. But until we get a break above there, this could still be, a lower high, a lower high. Oh goodness, I'm going rogue with this pen. We'll stop. I think that's pretty much it. Was there one? I wanted to quickly check out Rolls-Royce because that had a pretty horrible day yesterday. You can see a really, really bearish looking candle which engulfed a lot of, not that entire day from the previous day, but you can see a lot of the previous week's trading range, with the volume coming up as well. Rolls-Royce is also, we can kind of, it's not perfect. We've got a bit of a support level here, so it's kind of gone down right into this support. Not a lot to love here on a weekly chart. Get rid of that really. Yeah, it's looking pretty bleak. We'll keep an eye on it. A break of this support, and there's certainly a lot of room to move lower. So we'll keep an eye on Rolls-Royce. But we did say we'd have a quick look at energy. We'll just quickly look at ConocoPhillips. Broke
Do you
through
want
the
to
16.
take a look at? I don't know if you've got any charts drawn on oils, Jamie, because I just remembered I didn't actually talk about oil today, and it's had a pretty substantial
Yeah,
move.
let me bring it up. I've got some on Brent oil, I think, just some pretty basic ones. But yeah, so we had this really large move down. Do we have any volume on this? So yeah, pretty high volume day. A bit of a, you could argue this is a bit of a flag type pattern here, which we broke through pretty convincingly, as Joe was saying. For Brent oil, we're coming right back down to this $100 level. There is a lot of support here. We got
There's
the
been a break of
50%.
trend as well from those lows back in.
Yeah.
I know that was December.
Um,
Sorry, just throwing you under the bus here, Jamie, but that'll do roughly. Just
yeah, we got a number of trend lines you can kind of something like that. You can
yeah,
see actually with this trend line, you got the initial break here, you retested the underside of it, and there was rejection of it. Oh, look, it's actually gone greatly with my flag line that I've drawn. Um, but yeah, a pretty negative move down. Like I say, there's areas here where buyers will probably come back into the market, but this is the most negative looking candle we've seen since I'd say back in March. A really wide ranging bar. The story's pretty similar on crude oil as well. If we get rid of that, what we were just saying about the stocks we're looking at, we are getting a series of higher lows now. Sorry, higher lows, lower highs. If I can get the right tool out, here we go. So you can see posted this, which is actually, there we go. So this broke the succession of high lows we had because we're getting dips were bought into up to this point, you could see. But now we're having this lower high, lower low, oh, goodness me, lower low, and lower highs as well. Expertly drawn. I'd need this tool taken away from me, but yeah, pretty bad looking stuff for oil at the moment. I'd expect buyers to come in around. I mean, for this we've actually already broken through $100, but you can see there's a lot of buying support here. For me, it's important to maintain kind of around this level. There's nothing really perfect, but a break of kind of 92, and there's a lot of. It was a pretty impulsive move up throughout the start of this year, so there's a fair bit of room to move down. And if we kind of get a break of this level, we could have a bit of a double top potentially in play, which would have a measured move considerably lower, probably back down towards these kind of $75 levels. So yeah, a pretty terrible move on oil yesterday for oil bulls, but I'd expect buyers to come in and try and defend these levels here. Oh, it's just me. I was waiting for Joe to jump back in. I guess he didn't like my analysis. That's fine. It certainly has been better. But yeah, that's kind of where we're looking at for oil at the moment. I guess I'll jump into some gun to the head talk. Gun to the head it's a bit of a game that Joe, Steve, and I play. It's usually not just me, but it is right now. So the aim of this game is what we do. We come up with an idea live on stream, and we have to buy or sell exactly where price is. So it's a bit of fun. It's certainly not any kind of trading advice, but it's something that Joe and Steve have done for a long time, and I've been doing for, well, I say a long time, probably, I think it's about a year and a half. Maybe they can correct me. I've only been doing it for a few months, but the performance has been pretty good. So, looking at the charts for me today, what have I been seeing? Oh, have we got Joe back? I think we
Jamie.
might do. Hi Joe. I did the oil analysis and then I got no reply from you, so I thought, oh, maybe it
Oh,
wasn't so
poor you.
good. And then I zoomed out to the stream and you were gone. But I was just explaining our gun to the head challenge and I was about to get into it.
Okay, cool.
Um, do you have anything you want to jump in on? I've got something I can go with or
Yeah. So Yesterday we didn't do too well, so we'll talk about that first of all. We
Yes.
went long of copper, and you went short of the dollar index. There were some pretty significant moves in both markets, which yeah, didn't work out too well for us. You can check those out on our trading view profile if you want. We've got nothing to hide. It's all very honest and upfront here. So Jamie's idea on dollar index, he was
Oh, it didn't
selling, I
go
think,
well.
there's a valid level to sell. I mean, obviously the underlying trend's very bullish, and we were
Mm.
both looking for a bit of a turnaround, but pretty significant breakout. That's why you have stop losses on these markets, because we want to be proved wrong with these stop losses, and in this instance we have, and therefore we don't want to be in it. So trade closed. Similar situation with copper, big 50% fib level, didn't work. Prices collapsed through it, so we took our medicine and we move on. Yeah, so you've got some fresh ideas today, Jamie. What are you thinking?
Um, Let me see.
I've got one ready actually.
You want to
I
go?
don't mind
Yeah, go
going.
for it.
Yeah. So I mean, going through some of the stocks that you were looking at, it felt a bit more bullish out there at the minute. It was some decent moves materializing, some interesting bottom patterns forming on a few of the stocks that you mentioned, particularly some of the tech names. We've got an upcoming earnings season as well, so I don't know if we're going to start seeing some money move back into the markets for a short period to try and play that volatility. Nasdaq is, for me, looking potentially poised for a bit of a recovery. It needs to break this trend line for me to really be convinced about it. But what I saw on the intraday charts was quite interesting. So let's have a look see here. This is the hourly chart. For me, we've got a bit of a bottom pattern form here on the 60-minute charts, potentially a double bottom, maybe even a triple. And also a bit of a flag pattern forming as well, following this move higher, bit of a consolidation, and now we're trying to break to the upside. So I've lost a few ticks with that internet capitulation a minute ago, but still pretty decent. I think we've got a measured move of this flag up at 12,297, so give me a decent area to target. So I'm going to buy NASDAQ today at 11,822. I'm going to target that move that I've got up there at 12,297, and I'm going to put my stop loss just below the support here that I've highlighted at 11,603. So it's going to be at 11,666, giving me a 3R trade setup today. So that's my trade of the day.
Nice, Joe. Yeah, I'm liking the look of that. I think there is a bit more room to move higher on a lot of these tech names. I'm still overall bearish, but I think in the short term there could be a bit of a move up. So that one's
Yeah, quite
looking
possibly.
pretty nice.
So
Um,
that's going to be added now to TradingView if anybody wants to check it out.
yeah, good stuff as they all are. Right, I will pull up my idea, and I'm looking at New Zealand dollar against the Japanese yen. I've been keeping an eye on this level here at about 83.30 throughout the our stream, and it's holding up pretty well for me at the moment. We've had this pretty bullish looking candle on the 4 hour time frame. It's a little bit higher than I wanted to get in, but I can still get decent enough risk reward. So we're going to hope this support holds up. We are in a bit of a longer term. I hope we're in a longer term uptrend. Yeah, still in an uptrend for me on the longer term chart. So that I've got that going with me as well. So we'll look to buy before this moves too much higher. So we'll buy at current price of 83.83. That makes it nice and easy. Um, with the stop, it has to be. It's a bit tricky because obviously I want to stop below the support, and the real obvious place is to go below this candle here, but it does limit the risk reward slightly. But we're still okay. We're still getting 2.16 if we keep our stop at 82.98. And our target for this, do we target a move right? Let's target move right to the top. Why not? Anything can happen. We'll target our move all the way back to these highs up here, which gives us a nice 3.18 risk reward. I think it's unlikely it gets there before 9 o'clock, which is when we close our ideas. But if you don't shoot, you don't score. So we're going to have a crack at that. So our target level is 86.53. And like I said, that'll be 3.18 R if we do hit on that today.
Nice one, Jamie. Looks good. Okay, so what's going to move markets today? Well, obviously a bit of political mess going on in the UK, so that could have particularly an impact on anything linked to sterling. But in terms of economic data, At 3 o'clock today, we've got the US ISM Index Services number, so keep an eye out for that. And then at 7 o'clock UK time, we've got the Federal Reserve minutes, so that could also have an impact on market prices later on today. So obviously they'll be talking about monetary policy tightening, talking about inflation, talking about the recession potential as well. So plenty that could come out of that later, which could move markets. And then later on in the week, we've got the jobs numbers, the big one from the US, the non-farm payroll number on Friday. And at the same time, we've also got the Canadian employment report as well. So an interesting week ahead for the markets. So I think that's it, Jamie. I don't think we need to cover anything else unless
No,
you got
I
anything to
think we're all
say.
good, aren't we? I think we're all good. Trade safe out there, still very volatile markets, so yeah, just be careful.
Absolutely, well said. Okay, have a great day, everyone, and we'll catch you tomorrow.
Cheers.
Bye.